Gentlemen, welcome back to the channel. I hope you're honestly mentally prepared for what's going to be a shit show week, either good or bad. Like if you're bearish this week, it could be a shit show for you because one headline and the markets are back. If you're bullish, it's going to be a shit show because another bad headline from Trump and you're looking at even more downside. Now, as we talked about in the prior video, China has basically responded to Trump's threat of 100% tariff with, if you do that, we have a countermeasure. We don't want a trade war, but we're willing to go there. China says, I thought relations were going okay, that these export controls were not directly malicious, that America has 3,000 items on an export control ban. China only has 1,000. China called America's double standards out. Whether that's true or fair or not, who cares? What I will tell you is Trump's going to respond to China's response, and it's probably not going to sound good. Now, I've made it a point to draw some distinct differences between April 2nd and today. April 2nd was really a trade war launched on the world. Like, it was a surprise. It was not just one country. This seems like a trade war with, again, just China. Okay? It seems like other countries are progressing, trade talks are, going fine. But China is the most important country. Now, November 1st is a big date. I've talked about recession on this channel because of a trade embargo with China. That is the end destination if this does not get solved. And that's where you're in a tricky situation where you could see substantial further downside on markets. But it's not like November 1st comes around and recession is guaranteed. Okay? A trade embargo with China after November 1st simply means start your stopwatches or start looking at your clocks, because at some point you'll get a recession following that. You simply cannot decouple from China if you're America without severe economic consequences. Trump even said that on Friday. This is not rocket science, okay? The question is, does a month of a trade embargo cause a recession? Probably not. Like, is that going to be great? No. Does it cause a recession? Probably not. Does 2 months? You're starting to get dicier. 3 months? Probably. 6 months? Definitely. Okay? So, it's not just, again, November 1st. Things don't have to be solved by November 1st in order to avoid a recession. But you really don't want it to last too long. Now, I'm sure we're going to have a lot of new developments between now and November 1st. I'm sure we're going to get a lot of developments this week. Now, in today's episode, we're going to be going over Tesla stock and broader markets and certain outcomes and scenarios you should be prepared for, okay? This is not a moment to be perma-bullish, right? Like, no matter what happens, you're bullish right here. You're dumping all your money every week into markets, okay? This is not a moment to be perma-bearish. A lot of people for a long time thought that I was some kind of perma-bull. And the fact of the matter is, I'm not. I'm not a perma-bull. I'm never a perma-bear. I read the markets, and I like to invest based on what gives me the highest probability of making a lot of money or being right or being successful at any given moment in time, any crash or panic or whatnot. And for a long time here, since April at least, the skew has been to the upside. I've talked about this before, but if relations fall apart with China, as they seemingly are, that is a major risk. That is a major potential problem, and that is upon us. So I'll kind of give you a guideline on how I'm going about this market, investing fresh new capital when we're facing all of these difficulties. Specifically for Tesla, we'll talk about certain levels and where the stock could go, my thoughts around this week. We also have a bunch of earnings that are starting this week, and some economic data, but the big story is likely Powell on Tuesday, and we'll talk about that in today's episode as well. Do me a quick favor, first and foremost, before we get into all of this information, hit that like button as well as subscribe to the channel. If you guys want to come win with us, come join the trading community, by far the best place to be during an up market, a down market, a volatile market. We made a killing back in April. And if April happens again, we will make a fortune. If markets reverse and move higher again, we will be prepared for that and make a fortune on that as well. You really want to set yourself up to win, and that is what we are doing in the trading community. Link down below in the description of today's episode. But with that said, ladies and gentlemen, go Lions, and let's get started. Now, I need everyone to understand perfectly and clearly what I'm about to say next. This is vital, okay? Back on April 2nd, part of the reason we really, people got so fearful so quickly, people were caught off guard, is because this was not like a trade war launched against one country. It was a trade war launched against everything, like everyone and everywhere. From Thailand to India to Canada to Mexico to Europe to China, right? The list goes on and on. Well, right now, again, it seems like everywhere else is just fine. Negotiations are going as planned, but not with China. So China is the most important single country. I don't think we could get by with a trade embargo with China without pain, like Trump says, without some kind of recession. Here's the tricky part. On November 1st, if a trade embargo starts, that doesn't mean you're going to have a recession. What it means is the stopwatch is starting to tick, okay? The question would be, does a month give us a recession? Does 3 months give us a recession? Does 6 months give us a recession? I think once you get after the 3-month period, the odds of a recession really start to skyrocket, okay? The fact of the matter is, our economies are way too interconnected to just cut off trade with a 2-week notice without there being disruptions, okay? You can bet your ass Walmart, Target, all your retailers right now are, as we speak, scrambling to place orders from China. There's going to be a pull forward of ordering, kind of like what we seen the first time around. But after that, those products are sold and off the shelves, it becomes a much larger problem. So you probably have about 3 months, maybe 2 months, maybe a month and a half on aggregate, on average, until it becomes a big problem again. Now, again, good news is it's only with China. We don't have, other issues happening elsewhere. So it's a little different, but again, the point remains the same. November 1st, even if these tariffs go into effect, it doesn't mean a recession is guaranteed. It means the stop clock starts, and every day that goes forward, the odds of a recession go higher. So are we just immediately going to fall 20% like we did on April 2nd? Probably not. It's going to be volatile. We're going to be subject to changes in the headlines. But the longer it goes, the worse it gets. Now, with that said, let's get started with some of your economic data for this upcoming week. Now, we know that the government is shut down. If you don't know that, well, now you do. I would hope all of us would know that by now. So it means we're not getting a lot of economic data like we're scheduled to. We were supposed to get the jobs report like 2 weeks ago. Never got it. Okay? Some economic data we're just not going to get. Now, what's interesting is CPI was supposed to come out on the 15th, so this week, but it was actually delayed until October 24th. They say that it's being delayed because they want to add the annual Social Security cost of living adjustment, but it will be released whether the government is open or not on October 24th. Funny. All of these other data sets they're not going to release, but they are going to release the CPI report. I would imagine that's probably because it's going to come out good. Now, This week, we're not going to get the CPI report. That is an event for next week. But I do want to point that out because I think it would make sense if they're going to release it. It's probably going to be a good number, right? And that's something to look forward to. Now, on Monday, we really don't have much. Fed Paulson gives a speech. Must be a new guy at the Fed because I've never heard that name before. But hey, new guys, welcome. For Tuesday, the big catalyst is Fed Jerome Powell. Going to be giving a speech here. I don't know if it's going to be like the last time Powell was on the calendar, and he literally just said a few opening remarks at a conference, did not say anything about policy, inflation, rates, or growth, or anything important. But we'll definitely be on the lookout Tuesday if we get any headlines from that. What does Powell say about the new founded trade war again with China? Does he say that affects anything? Probably not. But what does he say? Now, on Wednesday, we're going to get the Fed Beige Book that comes out at 2 p.m. This is basically like a rundown of how the Fed districts look as far as employment, inflation, growth. And the Fed says, hey, look at the Fed Beige Book if you really want to know how the Fed is thinking about the economy. So that's going to be important on Wednesday at 2 p.m. Thursday, you're supposed to get a bunch of data here. Philly Fed manufacturing, business conditions, capex, employment, new orders, and prices paid. A bunch of Fed speakers really throughout this week. Almost every day you have new Fed speakers. You're supposed to get retail sales, PPI, core PPI, initial jobless claims, like a bunch of data on Thursday. Assuming the government is probably not going to be open on Thursday, probably still going to be shut down, you're likely not going to get that economic data. But if we do, it's going to be a big catalyst. Now, on Friday, you get industrial production month-over-month, capacity utilization. Again, you were supposed to get building permits, housing starts, export prices, import prices, month-over-month and year-over-year. It doesn't look like you're going to get that either. So we're going to miss quite a bit of economic data this week, but I think the big thing is going to be Powell on Tuesday if he comments anything. But really what's going to move markets is any headlines that come out from Trump or from China on trade. Now, also for this week, you're really going to get the start of earnings season. So tomorrow, you really don't have much for earnings, Fastenal, Monday morning. But Tuesday pre-market, BlackRock, JP Morgan, Goldman Sachs, Citi, Wells Fargo, Johnson & Johnson, Domino's, Ericsson, Albertsons. And then Wednesday, you have ASML, Progressive, Dollar Tree, Bank of America, Morgan Stanley, Synchrony, Citizens, Abbott, First Horizon, and Prologis. Wednesday and after hours, United, JB Hunt, Pinnacle, Banner Bank, a couple other banks there as well. Thursday pre-market, TSMC. People look into TSMC and ASML earnings as kind of a hint towards NVIDIA. What we've heard from Jensen Huang is that demand for their GPUs is accelerating in the last 6 months. So there's no reason, I think, to be, fearful about this earnings season. I think this earnings season could be outright impressive. Now, last earnings season was one of the best earnings season surprises we've seen in a long time. EPS was expected to come in with a 4% year-over-year growth, and it came in over 11% growth. It was the strongest earnings we've seen in years, okay? And that's partially why stocks have done so well. I think this earnings season is going to be another big surprise, and that's going to help support markets and drive earnings expectations higher for next year. But again, as November 1st comes around, it's not like outright recession territory November 1st, but if it lasts a while, if we have these tariffs that stay in effect for a while, the odds of a recession start to dramatically increase. And that's going to be the big risk that is going to triumph over any earnings benefit we get in the short term. Now, Thursday as well, you have BNY, KeyBank, Charles Schwab, M&T Bank, and some others. Thursday and after hours, Interactive Brokers, CSX, First National Bank, Bank of Ozark, Independent Bank, and then Friday pre-market, you have Ally, SLB, State Street, American Express, Fifth Third Bank, Regions, Truist, Huntington, Comerica, and some others. So it's actually interesting this earnings season. It seems like you're getting some of your major banks as well as like TSMC and ASML. Usually you'll get that first week that's like, Thursday and Friday of just a bunch of banks, and then the following week will be ASML, TSMC, United, and some of these other more important ones. But this week you're kind of getting all of the first round starters, if you will, like reporting this, the same week, which is kind of unusual. Now, again, as far as this upcoming week, you can see Friday was a really big down day. It was a knee-jerk reaction. Nobody was expecting to wake up Friday and for the situation to develop like it did. Stocks actually hit a new all-time high on Friday. It looked like it was going to be a good day. A lot of areas of our markets were doing very well. And then again, just out of left field, Trump came out and talking about export controls, and the U.S. is going to have to place tariffs on China, and we're going to go through a period of, pain for the U.S. economy. Nobody was expecting to hear that on Friday, so it was a little bit of a knee-jerk reaction, to say the least. Was it warranted? Probably. And even a lot of bulls on Wall Street say we were overdue for a bit of a, fear injection into markets. But again, this time is a little different in the sense of it's a trade war with China and not the whole world. But a trade war just with China, a trade embargo, if you will, is enough to give you a recession. It's enough to cause the markets to really, panic out. We actually had this debacle back in 2018. We had trade war moments with China. What happened, right? Well, it was right here. Stocks fell for a little while, bobbed around, and then things started to get really bad in December. From peak to trough, the decline was almost 20% exactly. Like just China alone having a trade embargo or trade war can cause substantial harm to stocks. But I don't know, I think we're a little bit more used to like Trump saying shit and then backing out and blah blah blah. So I think it's gonna be a very much developing situation, but one we want to watch closely, and I will keep you guys posted and updated here on this channel. But I expect Trump's not going to have great things to say here in the next couple of hours. I expect you're probably going to have a red day to start off this upcoming trading week. But as I said in prior videos, you want to take advantage of this. You want to set yourself up in a position to benefit no matter what happens. How do you do that? You start legging into markets on these red days. If I put like $5,000 into markets on Friday, if Monday is another 2% down day, I'm going to put another couple $1,000s, $5,000, whatever the number is, into markets, because any moment things are going to change and get much better eventually. But there's the risk that you fall 20% or more. You never really know. So you want to have cash ready. You don't want to go all in on any one day, but you do want to be scaling in. So when that reversal does come, you have taken advantage of it, because you could fall 10% on the markets and then one good headline comes out. Tariffs are not going to go into effect, whatever it is. You could be up 6-7% in a day. If you are not scaling in that whole time, you're not going to be able to take advantage of that. Okay? You don't want to be in margin, and you want to have as much cash as possible. If you're doing those three things, you're going to come out of this a massive winner. And the question is not do we come out of this, it is when do we come out of this. Now, for the broader markets, okay, Friday was a big jolt of fear. The RSI actually went from about 70 on Friday, closing in the same day at 42.5. Not too often do you see a reversal of the RSI that aggressively. Back here on August 1st, you seen the RSI hit a low of 48. So you're the lowest the RSI has been since, back here in around April 21st, April 22nd, okay, when the RSI was down to pretty similar levels to today. Now, why do I point that out? Well, the RSI doesn't, dictate exactly what's going to happen in markets. It doesn't mean we can't have additional downside, but there was a jolt of fear. I mean, you can even see that with the just leg down candle. Now, whether or not this evolves into something worse, time will tell. But based on what China said and based on what I presume Trump to say, it's probably going to get a little bit worse before it gets better. Okay, markets were already vulnerable for a bit of a correction as is because we had already been doing so well. At this stage, from all-time highs, you're down about 3.2% on the S&P, give or take a couple points there. Could you fall another 2%, 3% this week? That is certainly in the cards. 2% down from here puts you at 639 on the SPY. 3% down puts you at about 633. That actually looks like a level in which, we could approach pretty soon. That is kind of where you found support back here August 21st and September 2nd. So not that long ago in all reality. We just really be giving up the last month or two worth of gains. Not a huge deal. Now, I would hope at that point things would start to get resolved. If they don't, and November 1st comes around and tariffs go into effect, that's when Wall Street is going to get a little bit more concerned. But Wall Street, I don't think is going to jump to the same conclusion, that we're definitely going into a recession or, something like that. Okay. Why? Because again, it's only China. It's not the rest of the world in this active trade war. So it's a little bit different than November or April 1st or 2nd, but it's still a major problem and still could give you a recession and a large decline. But I'm not so sure markets are going to jump to that conclusion initially like they did November 2nd. I think it's going to be a little bit slower than it was before, even if we do see continued downside. So as I've said in other videos, on these big red days, you have to go out and buy something. If the VIX is up 20% or more, you have to go out and buy something because you never know. Things could reverse and get better in a day, and you don't want to miss that opportunity. But you also want to keep as much cash as possible on the sidelines ready to buy if things do get worse. That's kind of the catch-22 here, right? Don't put all your money in. Definitely don't be in margin. And leg into markets as stocks come down. I'm not a financial advisor, I'm not a financial planner, but the lower stocks go, the better the risk reward becomes. I think the secular trends are still intact. I think the consumer and the economy broadly, housing market, are going to get better into next year. Okay, big beautiful bill, no tax and no tips, no tax and overtime, tax changes, blah, 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 blah. A booming AI environment are going to fuel some of this economic recovery in 2026. Okay, but that really doesn't start until about mid-2026. Okay, I think inflation's going to continue to fall. Okay, hence, again, why I'm bullish over the next 12, 24, 36 months. I think we're still going to get multiple Fed rate cuts. Another reason to be bullish. None of that changed. The only thing that changed is sentiment, and we probably needed a little bit of a sentiment reset as is. But again, this thing, I mean, if we go into a recession, you're going lower than April levels. So like you're looking at a potentially massive decline. So again, leg into markets, don't put all your eggs in one basket too soon. I think a lot of us learned that lesson the hard way in 2022, myself included. Started buying, PayPal. It was like a $300 stock. It went down to like $130. I'm like, okay, like it can't go any lower, right? I put way too much money into PayPal specifically around $130. What happened? It went to like $60. I'm like, what the hell? Never underestimate how low stocks can go when things are getting rough, because you're going to buy way too much at the wrong time and then not have enough to buy at the right time. Okay. I think the odds are, again, that this fizzles out, that we come to an agreement, maybe Trump and China's president have a phone call, something, and things reverse. Trump doesn't want a recession. He doesn't want a bear market. You guys have to understand that. Fine. Perfect. What does this mean for Tesla? Okay, for Tesla stock specifically, 402 is a big level. If you can find support at 402, that's great. If not, you're heading back into the 300s. The 367 level was a big level last time around to break. That's when you started to really get some upside momentum, really around 370. That's a level to watch for on the downside as support. And honestly, you're probably going back to that level. 370 is probably in the cards here, unless, things get better quick, right? Below that, it's really no man's land. It really depends on the headlines. But like, if you want the worst case scenario, Tesla could go back into the 170, 180, 190 range. Like, we're talking recession at that point, right? That would be no small decline from here. For Tesla to even go back to $200 a share would be a decline of 52%. To hit 170 on the lower side would be like 58.5% down. Like, you're talking full-blown recession, worst case scenario is realized at that point, right? That's not a super likely outcome, but it is a possibility. Okay, getting down to 370 from here would be downside of about 10.3%. Unless things, again, get better quickly, that is certainly doable. Now, could we get back to where we were in August, around 320? Sure, that's a 22% downside from here. That's substantial. That's going to take things, getting worse from here. Okay, even that starts to become less and less likely. Okay, but could you fall to 300? Could you get back into the high 200s? Sure, that's a 30% decline from here to get back to $290 a share. That's a wild decline. Okay, again, not the base case, not the most likely outcome, but it is possible. Could you see a 10% decline? Again, like I said, yes, that is more reasonable. Okay, because Wall Street's going to want to see economic data. They're going to want to see signs of a recession before we all jump to that ultimate conclusion. Now, if things do get better, Tesla's going to whipsaw back higher again. Okay, you need to be prepared for that. Like, if you're selling Tesla here, you need to understand that one day you could wake up and Tesla's going to be up a lot on some of these trade headlines if things do get better. And I still think if things do get better, if they don't progressively get worse from here, Tesla's still going into the 500 soon. Okay? But again, those are just my thoughts. I could be wrong on that. As far as my personal position in Tesla, I don't plan on hedging all too much. If I do, I send alerts every time I make trades in the trading community. I have a small hedge for like $600 on this market. It's literally nothing. It's not gonna hedge anything. So again, I'm basically unhedged right now, and I'm not super concerned. Like, again, I acknowledge the potential downside, the potential risk, but again, as long as you're not in margin, as long as you're not going all in on any given day, that you're going to come out of this a winner. And you want to just make sure you come out of this a winner and not a loser, right? Like, I guess Tesla's not in a terrible place if you don't have long-term conviction to sell, right? Still in the 400s as of now. But you can't expect to sell stocks after, a major decline and then kick yourself afterwards once it recovers quickly, right? Like, if you're scared and you think a recession's coming, you think this is going to get worse, you need to sell now. I'm not a financial advisor, I'm not a financial planner, but if you're going to sell, like, now is your time. Don't wait for the markets to be down 10% like every other jackass does and then get fearful and want to sell. At that point, far too late, right? I'm not selling, but by all means, if that fits your narrative, to each his own. But you need to make that decision up sooner rather than later. Yeah, so that's what I got for you guys this week. Again, it's really hard to say because we're headline driven. One headline's going to make us have a really good week or a really bad week. And honestly, I couldn't tell you. Be prepared for like 5% upside or 5% downside. Be prepared for another 5% decline from here. or be prepared for a 5% rally from here and going back to new all-time highs, is what I'm going to tell you. So again, let me know your thoughts on this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check that link out down below in the description of this video for the trading community. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.